everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. We're back at the Safe House today, a precious metals vault in Singapore, with the founder, Gregor Gregersen, who is also the founder of Silver Bullion, which specializes in systemic wealth protection for its clients. Gregor made his way here to the vault today to talk about what's going on with the price action of silver and gold, and we're glad he could stop by. So, Gregor, welcome back to SBTV. How are you doing?
Very good. Very glad to be here, actually. Excited.
Yeah, it's been a while since we've had an interview here in the Safe House. But as mentioned beforehand, there's a lot of price movement going on with silver and gold, and so we wanted to get your opinion on that. But before we get into that, maybe you could give us a little bit of a background about yourself, and probably more importantly, why did you choose Singapore to settle in?
So I grew up originally German. I grew up in Italy. When I was 17, I moved to the United States, California. I saw Baywatch on TV and thought that would be a good place. I spent about 12 years in California from 93 until 2005. I got my bachelor's there. I worked in the US for a while for Merrill Lynch, Transamerica Financial Resources, and some other companies. After that, in 2005, I moved back to Europe, and my parents had some vacation rentals in Italy, which we sold ahead of the crisis which came. And I then decided to go work in Europe because I was back then. I was still a German citizen at the time, and I was working as a consultant in business intelligence. Essentially, I was doing measurement reports for companies like BMW and Deutsche Bank and so on. And I was paying close to 80% taxation. So essentially, I thought there has to be a better way, there has to be a better place to be. And I did 2 trips around the world during my spare time, during vacation time, which I put all together. That's one good thing about Germany, we had lots of vacation. And I found Singapore. Yeah. During that time, I read a book called From First World to Third World. And that book really convinced me that Singapore was a different place. It was a place which I thought wouldn't exist, a place where politicians don't just do what's best for the next election cycle, but are doing what's good for the population long term. Yeah. And that's something which I think, in my experience, in the last 20, 30 years, very few countries have been doing. So I decided I went to the consulting company in Germany. I said, I'm going to move to Singapore. Can we open a subsidiary over there? It would be really cool for me, so I don't have to find a new job. And they said, no, but if you really want to go, then go. But by the time I came to Singapore, they wanted me to work remotely anyway for them. And lo and behold, I ended up working for the same company, doing the same thing. And just by changing my jurisdiction, because as a German citizen, I was bound to pay tax on residency, not citizenship. It's just different for Americans. Yeah. But based on these factors, essentially, I ended up earning 4 times as much. Doing the same thing, work with the same people, I just changed jurisdiction. And that's the power of jurisdiction. And so by virtue of having lived in many different countries, I was able to compare countries and find countries which I felt are really the best country to be in at this era, at this time. Yeah. And that's how I ended up in Singapore. And the first thing said, once I ended up getting a local job to get my PR here, which is a green card equivalent. I ended up working for Commerzbank, second biggest German bank, as a senior data architect. And the first thing they did is to send me back to Germany. And now I was an expat in my own country, being paid extra and paying Singapore taxes. Wow. So I ended up paying maybe 4 or 5, 6 times as much. And that was 2008. So second half of 2008. And that's when Lehman Brothers went bankrupt. Yeah. And so I experienced, firsthand the after effects of Lehman Brothers going bankrupt, being in the trading room, because I was building compliance systems at the bank at that time. And when I realized that the financial system could be collapsing because banks were not trusting each other. And when I saw people were rushing out to buy gold and to buy physical silver and physical gold, I thought that might be a good idea. So by the time I went, I couldn't get anything. I ended up going to 12 different bullion dealers around the Frankfurt area. And somebody ended up getting 100 Maple Leaf coins before I got to them. And I eventually ended up getting a 1 kilo bar of silver at the gift shop of the European Central Bank. And I paid 19% taxes because we're in Germany. Now it's more than 19%. I ended up taking that bar, fly back to Singapore with it, paid another 7% because back then there was taxes on it, which is no longer the case in Singapore now, and had my 1 kilo bar and started to figure out, well, I want to get more of this stuff. Where do I get it? And at the time in Singapore, there was no place of getting it. And that's when I said, well, let me figure out how I can get it from the US or anywhere else once I can get supply again. I'll put it under my bed. I'll keep it for myself. And just in the off chance somebody else is interested, I'll build a website. I'll have live pricing. I'll have live inventory. And because software engineering is my background, it actually ended up being a very sophisticated website at the time. And people just didn't realize that I didn't have a store. I was just keeping it on my bed. So I will be meeting clients at the train station. These were all local. We didn't have any stores. This was just plain sale of silver bars and coins. So I'll meet them at the train station, give them 3 bars. They give me $3,000. And that's how silver bullion started. And after $800,000 in sales, I realized that, you know, I probably ought to be getting an office and start finding somebody to help me make a business out of it. And since then, in US dollar terms, we sold about $600 million worth of gold and silver. And we built up Silver Bullion, which was aptly named because I focused on silver, into what is today, which includes a safe house where we're storing close to $400 million US of gold and silver, with a mission and an emphasis on keeping it safe from what we call systemic risks. Yeah. A systemic risk are black swan events. It's hyperinflation, loss of confidence in the US dollars, capital controls in Europe or the US, nationalizations of gold in Europe or the US. Anything that might be going wrong, which might be affecting somebody's wealth. We want to make sure that we are storing the physical metal in your name, not in our name, so you don't have counterparty risk. We have the best insurance possible. And the jurisdictional exposure is limited to Singapore, meaning that we don't have exposure back to the US or to Europe. So that if the US were to, for example, decide that they want to nationalize gold, we will not need to follow that. Whereas if you're a global company working, you know, you'll have to follow US law. So essentially, we created a safe haven storage. And we spent the last 10 years improving that and trying to prepare for the big financial crisis which is going to come.
So there's another layer of protection with the nationalization clause, should anything happen. You mentioned you were there at Commerce Bank when these things happened. Any similarities between then and now that you see, or the feeling that you're getting with the way the Fed is printing money?
Back then, printing a lot of money like this was sort of seen as a very risky thing to do. Nowadays, it's not seen as risky anymore, it's expected. Oh. And the amount of money being printed nowadays is much higher. The economic damage is much higher than it was back then. So everything is many times worse than it was back then. This time around, I'm not standing in the trading room of a bank, so I can tell you what's happening there. But I guess for the banks, actually, it's not that bad because this time around, it's not a banking crisis. Yeah. But I think from overall scope of things, this is much worse than 2008.
We're more than halfway into 2020. Which global development that has happened this year so far do you consider to be the most significant or have the most significant impact on precious metals?
Well, I mean, 2020, I think, will always be remembered for COVID-19. But what affects precious metals are some of the consequences of that. I would say by far the biggest issue is that the real economy has collapsed in many ways. And so the economic output, the real value of goods and services that we create has gone way down. At the same time, the amount of money that is being created and printed has increased drastically. We went from, the M0 money supply went from about $3 trillion to $5 trillion. The federal deficit right now, we're thinking that's going to be 3.8 trillion increase in deficit 2020, but it's probably going to be a lot higher because they're talking about printing more money. So what we are seeing is more money being created, more currency being created, and less real output, which again is going to create more of discrepancy, which somehow will have to be accounted for in the future. So that's one issue. The second issue is that there's a big trend towards isolationism now. Companies are trying to insource, there's less outsourcing, there's less connections between countries. Countries are trying not to trade with each other. The United States in particular has been leaving many trade agreements. And what that means is things are getting less certain and there's going to be less trust. And when there is less trust, people are going to gravitate towards gold and silver because gold and silver you can own directly and you don't have counterparty risk. And as a matter of fact, as a side effect, whenever you have countries where there's a low trust in the government, people will traditionally tend towards storing and saving in gold and silver. And so the global developments of the early 2020 are very, very much pointing the world towards more uncertainty, less trust, and money being increasingly seen with suspicion. Ray Dalio, one of the most successful investors in Wall Street, essentially said cash is trash. Be worried about it. Go in some, diversify away from that into something more solid. And so everything is pretty much pointing towards the more important role of gold and silver in this decade.
Okay, yeah, I think a lot of people, it's hard for them to imagine that the physical paper bills that they have is so-called trash. They don't have the concept of other things being money. But we witnessed crazy levels of money printing as you touched on for more than a decade now. What kind of future do you see all of this money printing leading us to?
So when we say cash is trash, of course we don't, money still has value because as long as you can go to McDonald's and buy a hamburger with it, of course it's valuable. But I think what we mean, what Ray Dalio means with cash is trash, is traditionally people think of money as being something safe. And especially now, that's the wrong way of thinking about it because we are making too much of it. One way I would like to sort of compare it to us is imagine that the US dollar is a company. And whenever new US dollars are printed, you're issuing new shares. And if you are owning some US dollars, you have shares in that company. Now, let's say you have 1% shareholding. Let's say that the company is issuing 66% more shares. Now, what that means to you is that you're going to be diluted. Your 1% is now worth 0.6%. And if you're holding a company, that money actually has to go into the company. And so the company has more funds and can do something with it. But that's not how the government works. If more money is being printed, that money doesn't go to you to benefit you necessarily. That money goes somewhere, but it's unlikely to be to your benefit. So and that's actually what happened if you look at it, because the M0 money supply again went from about $3 trillion last year to over $5 trillion now. So in a sense, we increased that money supply by 66%. Now, That does not mean the cost of goods are going up by the same amount, because there's a big lag behind it. It's all about psychology and so on before that happens. But over the last 3, 4, 5 decades, we've been increasing the amount of money there at a much faster pace than real productivity. And now this is spiking up to unprecedented levels. And so it's just a matter of time for somebody to say, I don't want to keep my wealth, because that's what matters. It's your wealth. It's not your US dollar balance. It's your wealth. I don't want to keep my wealth in US dollars. I want to keep it in something else.
Yeah.
But where do you keep it? If you put it into bonds, they're not paying any interest. And anyways, that's still US dollars, because they're just promising you to give you back US dollars.
Right.
If you put it into equities, well, that's where everybody's putting some money now, because in the stock market is making new highs when the real economy is down in the doldrums, which all of people are wondering why. Well, it's because they're printing so much money, it has to go somewhere. It's going to a stock market, which means the stock market is way overpriced. It's probably the highest valuation probably ever compared to GDP. So again, that's a bad place. Maybe put it into real estate, but again, so it's questionable with the real economy breaking down. So again, put it into gold and silver, because you cannot print it. And so that's a natural diversification into which you would want to go.
Ray Dalio's words of cash is trash. That's when I think people are fully going to understand it when that time comes. But the premiums for bullion shot higher with the onset of COVID-19. Why are premiums still elevated today? Are gold and silver supplies still somewhat constrained, or miners perhaps feeling the effects of the pandemic where they're not up to full speed yet?
So the premiums you buy at a bullion dealer are mostly determined by how easily the bullion dealer can actually get new supply. That's not always the same as the overall supply of silver. Now, if you're looking at American Eagles, I just checked today, they still seem to be selling at $6, $7, $8 above spot. And actually, the premiums are going higher again. Now, if you're talking about LBMA bars, meaning the big 1,000 ounce bars, which you're getting directly from refineries, those are easier to get, and the premiums are lower. So you have to differentiate between, is the type of silver you want right now going to have high premiums, or is silver in general? And the answer is, we can still get LBMA bars at decent premium. It's higher, but not that much. So right now we are still somewhat okay, but coins are very difficult to get. And getting any silver out of the United States is very difficult. Supplies are shrinking. They've been shrinking for many decades. And the problem is simply that the price of silver is too low. There are not enough miners which are opening up new mines. Actually, there has not been new mines in silver for a long, long time. And in some cases, there has been disruption of supply. So some miners actually have had to close because of COVID-19. And so supply is actually being disrupted on that end. We haven't seen an effect of that yet, but it might be coming.
Okay, especially with all the talk of the second wave coming on. Rumor has it you're a silver bug. Any truth to that?
Yes.
Explain.
So what got me into this was actually Mike Maloney, invest in gold and silver. And Mike Maloney always had a big preference for silver. And I read the book, I was intrigued, I did my own research, and I pretty much ended up agreeing with it. And to just summarize it, the first point essentially is that the amount of above ground supply of silver is very low. To understand this, you have to understand the past. You go back 2 centuries, silver was the international currency. And it's been so for thousands of years. In the French, argent means silver. Silver means money. in French. It's the same in Spanish. In Chinese, bank means silver house. Those are symbols that make bank. So those things just sort of show you how historically everything was based on silver. England and several other European countries ended up invading China because they had a trade deficit in silver with China. So they invaded the country because of silver. So again, silver was, extremely important. And the US dollar itself was based on silver originally, not gold. So given this background, we had huge quantities of silver in circulation. And as you remember, in the United States, we had silver dimes, and silver quarters, and so on, junk silver, what is what we call today. And we were on a bimetallic standard. Now, by 1964, the United States ended up printing more currency, nowhere near what we're doing today, but it caused the melt value of silver to go up compared to the US dollar. And so people actually started taking these dimes and these quarters and melting them and then selling the silver and making a profit. So obviously the US couldn't have that, and they ended up taking out of circulation these coins and abandoning the silver backing, because the US Treasury back then was actually had $1 bills backed by dollars. So they're called silver certificates, as opposed to federal notes, which is what we have today, issued by the Federal Reserve. So the United States ended up with all of the silver, huge quantities of it, and didn't quite know what to do with it. Now, essentially, they decided to just dump it on the market. And so over the next 3-4 decades, in the 70s, the 80s, the 90s, the silver was sold to industrial users. And that was the time when the electronics revolution came about. And your average keyboard will have a couple of grams of silver in it. And that keyboard, once it ends its life, is going to end up in, say, landfill. And it's not worth recycling. And you multiply that times the millions or billions of keyboards which could use, and TVs and computers and smartphones and everything else. Everything has silver in it to some point because of its physical characteristics. Actually all of that silver the United States had ended up essentially being used up, and for the most part ended up in landfills. So one thing to understand, a similar story happened in other countries, that we ended up having huge reserves of silver to back on our monetary systems. And once we abandoned that monetary system, we sold it, we made keyboards out of it, and we threw it in the trash. So it's effectively gone because it's too expensive to recycle unless silver is drastically higher. So that's one very important point to understand. And that's why nowadays, the silver market is about 230 times smaller than the gold market in value. So there's little of the stuff. The next important thing to understand is that the ratio between silver to gold in nature is about 16:1. And throughout history, that was the ratio that gold to silver will be exchanged with. 3 months ago, silver to gold ratio was 125. It hits that high, meaning that silver was extremely undervalued versus gold, even though there's so little gold silver in above the ground supplies. Now, with silver spiking up finally a little bit, we are seeing that ratio coming back to maybe 85 or so. But that ratio the last 40 years has been going between 50 and 80. And the rule is, if it falls down towards 50, sell your silver and buy gold. And if it comes towards 80 or higher, sell your gold and buy silver. And if you would have done that over the last 30, 40 years, you would have more or less quadrupled the amount of gold that you have, or the amount of silver, depending what you will be in at that point in time. So it makes sense to buy whichever metal is cheaper compared to the other metal based on this ratio. And so based on this ratio, again, right now, it just makes sense to buy silver. My third point, if you look at the total amount of silver right now, based on the current price, we're talking about $50 billion.
Yeah.
And the United States, at current deficit spending, is spending about $10 billion per day, most of which is created with money that's being printed. So what we're saying is that the entire world supply of silver is valued at 5 days of deficit spending of the United States, which obviously is absurd. I mean, you would have told somebody that 100 years ago, they would have thought you're completely nuts. So silver is mispriced, not by a factor of 2, 3, 4. It's mispriced by orders of magnitude. Because let's say that silver is priced at $200 today. That would put silver at $500 billion. And that would be 50 days of money printing. Does that make any sense? So when it comes to silver, it's really understanding these contexts and understanding how little there is and how cheap it really is compared to the unit we are measuring it, which is the US dollar. Said it just needs to go much higher. And the question is not why did it go up 25% over the last 3 days. The question is why is it still so cheap?
Yeah, but with all this promising news about silver, and I'm one who is also very positive on silver, we gotta take a step back and wonder, silver is less than 50% of its all-time high back in 2011 as well. Any idea what's going on? Why the lag with silver?
So maybe the first thing to say is when we talk about all-time highs, we should also always inflation adjust it, because 2011 money was worth a lot more. US dollar was worth more than it is today. So if it hit $50 back then, today it should probably be $65 or $70 to be equivalent. Now, why is it still so cheap? Because it's a forgotten metal. People in general are buying what other people buy. They also have a normalcy bias, meaning that they believe that tomorrow is going to be like today, and they feel safe by doing the same things that the other guy does, which means buying stocks, which means buying Amazon. And oftentimes silver is not on the radar. So once people start shifting towards gold, and gold becomes more acceptable as something that you should be buying into, gold will start going up. But silver is not going to go up much because most people still don't have silver on their radar. But once gold starts going up enough, and people are saying, "Oh shoot, I should have bought gold at 1,500. Now it's 2,500. Yeah. What else can I do? Oh, there's silver." And then they research more about silver, and then they start saying, "Okay, maybe I should be buying some silver." And that's why Mike Maloney was comparing gold to a jumbo jet, which will sort of go up in a steady sort of way. Silver is more that the fighter jet. It will go up like this, and sometimes it will come back down like this as well. But it's also, the market is 220 times, 230 times smaller than gold, which means that a lot less money needs to flow into silver for it to really start going up. And those are sort of the factors that you have to look into. Essentially, silver has been forgotten. But once it becomes more in the news and a little bit more acceptable as a thing to buy, you will see that price really go up very drastically. Yeah. And what people should realize is it is so low, based on the example I gave before, that it has so much more potential of going much, much higher. And a history of doing that is that, at least in my opinion, it's not the time to sell. In my opinion, I've been adding more silver now, and feel sorry I didn't buy more, because I expect it to be going a lot higher from here on out.
How much gold and silver, in your opinion, should people have? I mean, all this talk about gold and silver rising, the Fed printing money, what's a fairly good amount that people should have?
It depends on what you're doing with your money and where your money is. If you're keeping most of that money in US dollars now, or in US treasuries, which is the same as US dollars, you should definitely take a big chunk of that and put into gold and silver. Remember, if you're being paid 0.5% in interest, but the real inflation say is 5%, you're losing 4.5%. Now, keep in mind that cash is a depreciating asset. US dollar is a depreciating asset. On average, since the Federal Reserve was created in 1913, the US dollar has lost 3.2% in value per year. Sometimes more, sometimes less. And that's according to official statistics, which are low. The real numbers are higher than that. So it lost 98% of its value. So you're guaranteed to lose money, to use wealth, I should say, if you keep in the US dollar. So you should move a sizable chunk into assets which are going to go up over time. Gold, on average, has been going up 4.2% per year since 1913, since the Federal Reserve was created. It went from $18.92 to what we are today. It's actually more than 4.2% based on latest numbers. So you have an appreciating asset, and you're actually likely to have real gains. Now, where so much money is being printed, where there's a real chance that there's going to be a loss of confidence in US dollars, you should definitely move a sizable portion of what you have into gold and silver. Now, if you have your funds into your own business or something you understand or something productive that you do, then it's a different issue. It's about your opportunity cost, what you're doing with it. How confident are you in what you're doing? But if you're looking at it as something you need to retire on, you want to go into gold and silver. So the rule with gold or silver throughout, in the past has always been put at least 10% of it and hope you never need it, because gold and silver will go up in value when you have a crisis, when things are going bad. And my opinion is that things are going to get worse. And again, it's a time right now, we are still at the beginning of this bull run in gold and silver. You should go into it now.
Yeah, because most people, money managers, I guess they'll say, allocate 5 to 10% of your portfolio in gold and silver. But last time we spoke, I understand you're holding 70% of your wealth in silver. Are you still holding 70%, or has it gone up a bit, or has anything changed?
It depends how we calculate what silver bullion is, and how much the extra value of silver bullion as a company is towards its silver holdings. Silver bullion, the company, we own 500,000 ounces of silver now, and we have zero debt. So, and I still have about 54% or so shares in it, which means if you calculate my wealth, what's the premium of silver bullion over the actual physical holding of it? And that would really tell me how much silver do I have as a percentage. In practical terms, most of my liquid assets is in silver right now. Once we get to the point where silver goes up, to the point where the gold to silver ratio goes back to, say, 50, I'll probably sell quite a bit of that silver to go into gold. But I'm not going to go out of gold or silver unless I have a really high opportunity to put in something else. I try to stay away from cash or US dollars or other fiat currencies for long-term holdings.
So moving over to gold, with the advent of gold-backed tokens, where micro amounts of gold can be used digitally, this would perhaps diminish the use of silver being a monetary metal. What's your opinion on that?
I don't see that happening at all. I think the reality is that silver right now is not a monetary metal. It was in the past, but it is not really now. I mean, we don't go around using a silver coin to buy a coffee. And I think if you take Bitcoin, say it's $180 billion in total valuation right now. It's 3 times bigger than the silver amount of silver out there, but it's much smaller than gold. But both gold and Bitcoin thrown together, they are dwarfed by the amount of fiat currency which is out there. So really, I see gold-backed tokens, silver-backed tokens, and other tokens, assuming they're not a scam and they're well done, the potential for the technology to work together is actually very positive for both for crypto and for precious metals. And the key reasons that unite these things is that both are distributed. Now, the crypto people essentially figured out how to ensure that you can have a unit, a digital unit, which cannot be copied, which is a finite unit, which can be sent to somebody else without needing a centralized party. Essentially, how can I make a wire transfer to you without needing a bank in between? And only you and me are parties to this. That's the same as gold or silver. If I have a physical gold bar or a silver coin, I give you that silver coin. I don't have a government in between whose value depends on that coin. If you take India, for example, we had a case where Indian rupees, the large bills, have suddenly been rendered worthless because the government says so. In the case of a silver coin, you actually own that silver coin. But if you have a US dollar, it's an IOU that the government owes you. And the government can decide to devalue that or default on it, right? So it's a centralized system. But if you have that coin, you're essentially decentralized. And that's the equivalent of tokens in the digital world. So I expect that over time, gold, silver, and crypto will become friendlier to each other as they understand each other more. And I think overall, both will prosper because once there is a loss of confidence in the US dollar, people will go into gold, they will go into silver, they will go into Bitcoin, they will go into other crypto assets as an alternative. Because let's be frank, there's not much out there nowadays where you can go to. If you go out of the US dollar, the euro isn't a great choice. The Japanese yen is even more indebted than the US dollar. And Chinese yuan you cannot trade, and they also printed tons of that. The Singapore dollar and the Swiss franc might be some of the better currencies, but they're small. They can't absorb all of that. So where are people going to go? And what do they have access easily? You take Americans, they have a very hard time to get a local bank account, actually buy Swiss francs or Singapore dollars. That's very difficult. So always US dollars. So really, putting your money into gold, silver, or Bitcoin, that's a realistic alternative. And so they will all complement each other. And I think they will reinforce each other. So they're not competing against each other, in my view.
Okay, so perhaps there's an outside chance that maybe in the future, silver may gain some type of monetary status?
I think that silver might become part of some sort of backing. The government, once you have loss of trust in the currency, is going to have to find something to back it to make a new currency. And that something has to be something people can trust. Now, gold is also an obvious thing. Now, because silver is so small compared to gold, it might not play a big factor. But as silver is becoming more valuable, let's say silver goes back to $250 per ounce. Now it's starting to become more relevant. And maybe we're going to have a backing which says that we're going to be 95% gold and 5% silver or something. Maybe Bitcoin is going to be part of it. Maybe some other assets going to be part of it. I don't know. Whatever that basket is going to be, I think silver can have a role in that basket. But I don't think we'll go back to a point where people actually use silver, the way we did 200 years ago. That time is probably past. Partially because we have crypto and we have digital payments, and it's just become too convenient to do it that way. But we can back these with gold and silver. And the reason we would want to do it is because you cannot print it out of thin air. Whenever it's based on trust, the trust gets abused. But as long as you have some physical backing and you can redeem it, and that's the key of keeping systems honest. Because when people feel that there's too much being printed, we're going to start redeeming it. That's going to put a brake and prevent entities, companies, or governments from creating more of these things. So as long as you have the backing and the redemption, you have a system that can last throughout time.
Okay, so let's say people get it. People understand this. They're hearing what you're saying, and they're understanding that silver and gold is more than just an investment. It's also a form of wealth protection, a form of insurance as to what's going on. What would then be their exit strategy?
Again, it depends a little bit on the individual, but I don't have a price. I don't want to go back into US dollar or fiat anytime soon, unless I have another currency which I can trust. But getting no interest for a depreciating asset, which is being printed, at record amounts, it doesn't make any logical sense. Just because other people are doing it doesn't mean it's the right thing. And that's why I'm very happy Ray Dalio is trying to bring that message out, because in some ways he's the ultimate Wall Street genius, and he's telling people how it is. But having said that, assuming things stabilize and things start making more sense, my rule will be if the taxi driver is telling me to go buy physical silver, it's probably time to sell some silver. And if silver has really gone a lot, and you see land, you see real estate, you see something else that you want to buy, which is now a good rate, go for it. You want to start a business, you want to grow food, go for it. It depends what is your opportunity cost. But if you don't have an opportunity cost, just stay in silver and gold. You're better off than keeping it in fiat. And to look at it in another way, let's say we are wrong on all points. There's going to be no crisis. US dollar will last another century, and so on and so on. Worst case, you're putting your money into gold, which on average over the last 107 years has gone up 4.2%. You're not going to lose, your shirt on this. This is not a risky stock investment or a crypto ICO, which might suddenly become nothing. This is gold. No matter what, you're not gonna be in a terrible situation by buying it. So your potential of protecting yourself is huge. Your risk really is minimal. And all you need to do is go past this normalcy bias, this sort of, it's new to buy gold. Just do it. Buy a little bit of silver, buy a little bit of gold, because time is starting to run short. And when silver goes up 25% in 3 days, it means something is happening. And it's better to buy it now than to buy it when silver is $50 or $80 or $90.
Yeah, I hear you. Well, I'm going to be buying some more. So how's my employee discount? Still there?
Yeah, of course.
Gregor Gregersen, we thank you for stopping by, and we hope we can do this again soon.
Sounds good.
Thanks. That was Gregor Gregersen, founder of Silver Bullion, a precious metals dealership, and the safe house, a precious metals vault in Singapore. Please visit www.silverbullion.com.sg for more info. If you like this video, please subscribe, and do check out the audio versions on iTunes and Spotify.